Recording in progress.
Hello, everyone. Hopefully, you guys are doing well. Welcome to another session of financial modeling. And yeah, I'm sharing the screen with you. If you guys can confirm me that whether my screen is completely shared or not. I guess it is. Yeah. So far, what we had, I guess we have done particularly these classes, right? These 20 classes, I guess, of the basic Excel and financial models of P&L, balance sheet, and each and everything have been done, right? So it was a great interacting with you. And now, since we guys are growing in terms of Excel, we guys are growing in terms of particularly models in terms of projections. So therefore, the pressure and the files they will be using or we will be using are going to be computing, right? So today, before starting, I present to you in front of a model that's three statement model. And the objectives of these classes that are from starting to the end are to give you the new ideas, the new formulas, the new pattern, the new things so that you exactly can work on your freelancing career as well, right? So you guys now have a good idea of the basics of the Excel and each and everything, and then you have a particularly a good grip on the numbers and all that. So now we're going to be seeing different models so that we have a great thing to focus on, and so that we have a particular working mechanism. So we should be doing right. So, sir, which of the models are we going to cover? So, let me particularly open the file that I have opened for you so that you should be getting an idea that what models we're going to be working on. Yeah. So, let's go back to the orientation session in which we wrote about some workings so that we get initial idea, right? Yeah, so time series we did, and it was a great thing, I guess. I guess we have done many things, right, for this. So the orientation still suggests us, yeah, this, right? So working capital, amortization, income statement, these particular things are done now 10 years or 5 years projection model, right? Now this thing that how the things are projected, right? Similarly, we're gonna be working on we have done the revolver technique, we have done these things, we're gonna be seeing company valuation as well, right? Then towards the end I'll be showing you some critical dashboards as well. So still there are things that we should be focusing on before directly joining the freelancing, and before that, the main important thing for you guys is practice, right? Now go on and try making these sort of models, right? Go on and try making these sort of models which are critical and which are really important, right? So in today's class, I'll be showing all the formulas that we have used here and all the tabs that we have made here by using the numbers and all that, right? So now the target is to evaluate or to see these sort of different models together so that we could work on along with that. Right. So any questions? The theory and the scenario is same totally. That you're gonna be texting me either on WhatsApp or on the Zoom chat box if you are attending this class live or if you are seeing the recording. So obviously, you can particularly text me on my WhatsApp number. My number is with you. It's +92 331 2623 849. See, before working on any model, right? Before working on any model, what you have to do, you have to make sure that you have written instructions. Now, what are the instructions? What are the instructions that how we gonna be working on this model? How are we gonna be working on this model? So before projecting or forecasting, now this is the class of forecasting, right? That how to forecast or how to project, how to forecast or how to project based on this particular model. It's simple that if you are forecasting, right? So you should be clear up with your instructions. Now, sir, what are the instructions? Can you tell us what can be the instructions? Can you tell us? Yeah, it's simple. That one thing is assumption. In this model, we will be taking assumptions, the tab here of assumptions, right? So assumptions are manually incorporated. You cannot link assumptions, right? You cannot just say that based on this, I have linked that assumption to this cell. Now, so cell which contain the assumptions are not linked to any other cell, right? Cells, those who have the assumptions, they won't be linked with any other cell, or they won't be particularly linked with any other cell. The thing is that these are the assumptions, right? Just like a first year sale growth, we have assumed it's going to be 10%. If my business is started and I'm assuming, oh, the business started, so I'm going to be having 1 lakh, particularly, I'm going to be having 1 lakh number of customers, well, or 1 lakh per day revenue. So that's totally other assumptions that I need to incorporate, right? That I need to incorporate. So some are going to be manual assumptions that I need to be using, right? Some are going to be manual assumptions that I need to be good going. Okay, then we have linked assumptions. Huh? Now, what's linked assumption, sir? Can you tell us what's linked assumption? See, linked assumptions are basically the assumptions that they have been linked with the previous cell. I'm going to be showing you all these things, right? I'm going to be showing you all these things. Don't worry. If I say my first year sales growth is 10%, so it's a manual assumption that I need to write down. And then if I say that my next year's projection would be 1% year on year growth, now I will be linking that 10% with 1% and on. I will be linking that 10% with 1% add on. Sir, can you tell us or show us the samples of these assumptions? Yeah, no worries. I can show you the sample of these assumptions without a worry. So let's go on to the assumptions tab and see. I am on the assumption tab. So 2021, this is actual, and then this is actual. And then here we have forecasted the next 4 years, right? Sorry, next 5 years. F means we have forecasted, right? F means we have forecasted. Okay. So let's just see the revenue. It's 4.1 million on this year, right? And the growth is nothing because there is no growth. So I have incorporated a formula that if there is an error, if error, give me an A. If there is error rising, don't give the value error, don't give that error, give me an A, right? If there is an error, give me an A. This formula have been taught in the classes, right? then we have then we have this formula here that this year divided by this, so -1. So we see that in year 2022 actual, we got 10% growth, right? We got 10% growth, and then here we have got 11% growth. So on the forecast, now this is an assumption, right? See the assumption, the blue color, it's an assumption. Huh? See the assumption, this is blue color. So here I have said 10% will be the growth that I'll be expecting. So what I did, I incorporated this into 10%, add on 2024. So 5 million and add on 2024. So, sir, what is this, huh? Sir, what is this? This is basically your 10% assumption that you made increases your revenue. It's basically your 10% assumptions that have been made increases your revenue. Then we thought next year will be 6%. So we made a formula that this plus this percent here, we made a formula this plus this percent here, we made a formula this plus this percent here, we made a formula this plus this percent. So these all are the what? These all are the assumptions. These all are the assumptions, right? So this is done now. Now, once we have taken these assumptions here, see, I have written the currency I'll be using USD, the name and the model version. And guys, one more thing, once this complete model is being understood by you, I expect you guys to make these type of models and send it to me as well. That's a we made this or made and post it on LinkedIn and then tag me. That's a throw your classes. We made these kind of models. Without practice, you are nothing here, right? Just remember one thing. Without practice, you are nothing here. So similarly, the cost that were actual. So what you guys can do exactly, you can go on any on the company and do these actual figures, use 3 years actual figures. I'll be giving you the company at last, don't worry. Do these actual figures and then forecast based on some of the assumptions that you think, right? So it's going to be a great, I guess, experience. So the gross profit here is this, and the gross profit here is this, and the GP margin we have calculated. We said them that this divided by this, and if there is a kind of an error, so give us this number, right? So this is particularly the formula. This formula, I'll be explaining it to you, no worries. It's simply that we said that this number O14 divided by O10, and if there's an NA, so do this again, and if still there's an error, so you can give us NA. So these are the greatest formulas, and I'll be explaining you throughout the classes of the models. I expect that I'll be solving at least 5 to 10 different models in which discounted cash flow model, balance sheet, P&L. We have done that. Company evaluation, some models. So I'll be bringing up to you, but again, you need to do it, and then you need to have it, right? So these are particularly the particular GPM. So again, these are actual figures, and here we assume. Now, again, there's an assumption that in this year, I believe that this company would be making this particular this company would be making 44%, 44%, 44%. Here I thought 45. And now on basis of this, and now on basis of this, I made the COGS, right? And now on basis of this, I made the COGS. What I did, I said that this is my revenue and 44% is my GPM. So that means 36%, or sorry, 56% is my COGS. 100 minus 44, that means 56% is my COGS. And if there's an error, please give me zero. If there's an error, please give me zero. For example, if there's an error, please give me zero. So it came you as a zero number when I gave an error to this, right? So this is that we did. This is that we did, and then here we did same thing, that 44%. So 60 or 56 will be the COGS, and here it is the COGS. Then here will be 56 will be the COGS. So here is the COGS, here is the COGS, and then here is the COGS. Here is the COGS, right? So this is direct cost, and here we have the gross profit numbers that we made, right? So I have just got the assumptions now. Right? These are my assumptions, right? Again, I'm saying you, I'm just explaining this terms tab, and well, this is the basics of making the models and dashboards that for any of the user, you are going to write the assumptions, right? For any of the user, you're going to write the assumption. Is it clear, guys? Now, let's see what are the other assumptions that we should be taking on. So here we have OPEX. Do you know about OPEX? What's OPEX? I have worked in OPEX, right? Do you know about the OPEX? I have really worked in OPEX. So Therefore, it's operating cost, right? It's operating cost. There are different company policies. In our companies, the OPEX was sales and distribution and admin and general's total that I used to work on. So the company's OPEX for the actual numbers are 8 lakh 950 and 1050, right? And then we have made EBITDA as well. In EBITDA, what's EBIT? That means your gross profit and adding the OPEX here, adding the OPEX. So OPEX is your expenses, depreciation and amortization. Mainly there is in depreciation and amortization in this number, but again, the determination of these numbers depends on the companies, like what policy they follow, how they calculate EBITDA, how they calculate these. For me to keep it simple, I have make sure that I should be keeping it minimal with the minimum number so that I could show you how to do these models or how to make these models. Like again, my aim is to solve 5 or 10 different models with you so that you can project this is one of the based on forecasting, right? So again, my aim is to show you these type of models, that how we're going to be making and how we're going to be acing, right? So 8 lakh, we have this. This is again the EBITDA and the EBITDA margin. Margin means sales. So EBITDA divided by revenue. We did it here and we did it here. Again, we made assumptions that in this year, the forecasted year, my EBITDA margin would be this percent. So how did it came now? This is from the top management, right? They gave you, like while budgeting, I worked in the planning and budgeting department. We used to give the assumptions that you need to keep this dollar rate, you need to give this economic growth, you need to keep this particularly minimum wage. We used to give that assumption. So top management would give you, and then you just have to make your model just like that. That if you just change it, your numbers get changed automatically. So how if I want 25%, let's say EBITDA margin, my models gets updated, numbers gets updated, right? So this is what the basics of models are. That on the Excel in these 20 classes, if you remember, I don't know whether you remember or not, but in these 20 classes, we have taught you the basics of the modeling, like how we gonna be doing these particular schedules step by step. And from the 16th class or 15th class, you have got that how you're gonna be just evaluating or incorporating your skills that you have learned throughout the course. So in these upcoming 10 classes, I will be showing you how you're gonna be particularly upscaling the skills that you have learned through those 15 classes. And at last, I'll show you that how exactly these skills can lead you towards revenue generation as well. Apologies, my product. Apologies for my product. Yes. So we have EBITDA margin here, and then on basis of this, we have calculated OPEX, right? We have calculated OPEX because OPEX used to be a manual number. So what we have did here, we took simply revenue, right, and then multiplied it with EBITDA margin, right? Revenue and then multiplied it with EBITDA margin. So what we got EBITDA, right? Revenue multiplied with EBITDA margin. Let me show you. Let me show you. Here is revenue multiplied with EBITDA margin. So in order to calculate OPEX, I made an assumption that my EBITDA is GP plus OPEX. So in terms of OPEX, what I'll be doing, I'll be minusing the EBITDA. I'll be minusing the GP so that I get OPEX. So I've just reversed work here, right? Here in actual, I had an assumption. So what was the assumption? That EBITDA is basically GP plus OPEX. So if I need OPEX, what I'll be doing? I'll be doing GP plus EBITDA so that I'll be getting OPEX. Did you guys understood? No? You guys are at, let me show you again. Huh? GP, OPEX, EBITDA formula is, what's the EBITDA formula? EBITDA formula is GP plus OPEX, right? GP plus OPEX, right? This is my EBITDA formula. This is my EBITDA formula. So if I have the EBITDA formula, what I'll be doing, if I have the EBITDA formula, uh, if I need OPEX, so what will happen? If I need OPEX, so what will happen? It's simple. Let's say for OPEX, you're gonna be doing EBITDA, right? EBITDA minus GP. Okay. So for EBITDA minus GP, what I did, I calculated EBITDA through this percentage and then I deducted GP. And then I deducted GP. And again, if there's an error, please give me zero. I want my model to be error free. So I always use if error. If there's an error, please make it zero. Don't tease me with that. Please make it zero. So this is how your OPEX is being calculated. So guys, I need to say something about this, that based on these assumptions, I'm calculating certain numbers, which I'll be calculating certain numbers that I will be using for this particular things, right? For this particular things. So this OPEX is done now. EBITDA particularly thing is done. The currency is, and I'm writing this as well, right? That USD, then we have USD, and now this is in percentage, so there should be a percentage here. Now depreciation, sir. How again? These are actual numbers. The other expenses, the interest expense, the income tax. Now income tax is something with particularly other. Now, this is a green color, right? Green color linked to cells in sheets. Now, this is basically linked with here, the income tax. See here, we have made certain arguments of if you remember the text class. So I'll be coming on this tab as well, but I need to show you first this, right? So this is the income tax and it's being calculated from that particular numbers. Okay. So this is particularly that. And then we have net income. This is actually a calculated number from EBITDA to all that expenses. And we have got that, right? We have got that. And then net income margin is this. Now here, what we have done here, we haven't assumed this. These are on the actual grounds that the models that we have made. Here, we haven't assumed this. We just linked it with the actual number, what we have, and this is how we have, right? And this is how we have the depreciation schedule that we have made, right? The depreciation schedule that we have made. These numbers are actually given on. These numbers are actually given on the financial statements page that we had. So far, we have got a good idea on the assumptions. Similarly, now these again are the assumptions, the actual numbers from any of the financials that we have taken. Okay, and then this is being linked with this, the year one cash that we have, right? And it should have been calculated by the cash flow statement. So therefore, it's been made there, and these all are linked here, right? These all are linked here in this. These are assumed numbers, again taken from FS, and there here comes the forecasting. This has been coming from the cash flow statement, like what will be my cash exactly. Receivables, again, I've got some assumptions here. Receivable, again, that I've got. And now what I'm saying that R10 multiply by G27. Now what's that? R10, this is my sale. This is my particularly revenue R10, and then G27. What's that, sir? It's my receivable days. So what I did, I made the days here. See, all the basic things have been included, right? I made the days here that my receivable days are 30 on, and on these 30, 50, and 45, I made numbers of inventory, receivable, and payable. And those who are taking these classes, believe me, I am an accountant. So I used to work on these formulas daily. And the aim of these classes is basically to give you the accounting insight that if there is no revenue, but there are receivable days or inventory days or payable days, you can easily do it, right? You can easily do it. Similarly, the inventory is again on this inventory. What we have did, we took the COGS because inventory is taken on COGS. So COGS into the days COGS, that's multiplied by 50 and then divided by 365. You used to calculate it these days on basis of numbers of the inventory. So in order to reverse work, you'll be reverse working and getting these numbers, right? Now these are same. I took now what's that? Which color is this? These are linked assumptions, right? These are linked assumptions that I I didn't do anything. I just linked it with the other cell. The black numbers are link and calculations. These black numbers I've made. These black numbers I've made. These are linked and calculations as well. These are linked and calculations as well. So this is other current asset. This is other current asset that I have linked there. So guys, I'm showing the importance of making these instructions so that any of the you seeing this page would give you a great idea. Any of you seeing this page would give you a great idea. Oh, like this we're gonna be doing, it's totally fine. Oh, okay, like this if we are going to be doing, it's totally a good one and the fine one, right? So linked assumptions have been made, assumptions have been made, then link and calculations. These are black numbers that we'll be showing up. These are black numbers that we'll be showing up. So this again is a great number. Okay, and then these are what used to green say link to other cells in other sheets. These numbers are being from other sheets and linked. So guys, this instruction page give you a greater idea that how this number is being done. This is manually assumed. How this number is being done. This is linked in assumption. How this number is being done. These are links in calculation and then linked to cell in other sheets. So I hope these all four numbers have got assumptions have got been clarified by me, and you can see these as well because the assumption page is mainly an important one for any of the financial model. Yeah. So now this terms page, we got idea of each and everything here, right? Title, it was just a title that this is the worksheet. This is hyperlink. You know about hyperlinks. We have made in the classes that how to do that. You just have to click that and then you'll be on those tabs. Then we have assumptions. Then we have executive summary. It's again, this is one of the page that I really love and I really have because these are the summaries that I used to present to my BOD about that. So I believe this is something important that we'll be having. And I expect that after once we have covered this particular model complete, so I expect that you guys are showing me or giving me an idea that how exactly you have understood through this course and making your models, right? So this is going to be great for sure. And then here are certain things that we should be taking care of. But before that, terms. So guys, this is all the basics of making a models. These are all the basics of making the models that how and why exactly you easily can do the financial models on your behalf if you clarify things like this, like assumptions, like linked assumptions, like link in calculations, like link to other in other assets. So here I have given the terms and abbreviations as well, that these are the numbers or terms I'll be using in that model. So you should have an idea that how to do that. Like A is actual figure, CapEx is capital expenditure, COGS is cost of goods sold, DCF is discounted cash free cash flow, D&A is a short key of depreciation and amortization, EBIT is earning before interest and tax, EBITDA, earning before interest and taxes, depreciations and amortizations. EV is enterprise's value. F is forecasted figure. NPV is net present value. OPEX is operating cost. PB is price to book ratio. These are all the formulas that we'll be understanding through this complete modeling picture. PE is price earning ratio. ROA, return on assets. ROE, return on equity. ROIC is return on invested capital. T is tax rate. TV is terminal value. USD is United States dollars. So these are the short-term mnemonic codes that I'll be using, and these are the long-term codes that you need to use for this, right? These are the long-term codes that you need to use this. So guys, what I want is that before starting the model, you should be making these page with you so that you, once you have made the model, it is easily understood by any other, right? It's easily understood by any other that you need or you want, right? So let's go to the assumptions tab. Startup operation is this, first year is this. So this is a basic thing. That general assumption, I have calculated depreciation on 10 years, interest rate, again, a manual assumption. See the color. This identifies that how your model is structured, right? Interest rate is this, then income tax rate is 25%, then dividend payout rate is this, okay, then net working capital, it's 30, 50, and 50, and then we have particular model checks. Now, model checks are something that I will be showing you here. Then we have executive summary and financials. These are basically the model checks that my model is completely tied. So this is what the last thing that we'll be doing. And then here we have got payable, other current liabilities, the actual numbers. These are the linked assumptions that we have. These are payables, again, based on the payable criteria, just like we calculated receivable. Black numbers are actual, real, sorry, black numbers are linked and calculations, and then payables, okay, and then we have these 10, 10, 10,000, and then this is 12 and all that, right? So this is how you are going to make the assumption side. See, in the previous classes as well, I've told you the assumptions side, like in this model that we used to have, the assumption side was one of the important thing that we used to have, right? So this is one of the important thing that we used to have. Let me go on to the last page and then show you uh, that we used to make assumptions first, right? We used to make assumptions in the last model that we made as well. There are certain things, not in this model, apologies, not in this model, I believe. Yeah, here, financial models. Oh, sorry, this. Uh, yeah, financial team to set. Here also, the basic model that we made, here also I remember that there were certain inputs. Yeah, see the inputs. These are the assumptions, but it was quite a simple one, I believe. It was quite a simple one, and I'm showing you a comprehensive one as well. Like this was the basic model that I used to made with you, but now the advanced modeling has started, right? Now the advanced modeling has started. So we did this. The black numbers are linked with calculations. The green numbers are linked to the other cells. That these are the linked assumptions. Just previously, I could do this like previous year plus 1,000, and then I could add it as well here, right? So this is how the things could go. But since I've kept it simple, so make it simple. And so far, once you will practice, so you'll have an idea as well, right? Then we have made capex and financial debt as well. Like here, there's no capex. Here, I assume is my assumption that I'll be doing capex, 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 and through this, my debt will increase, right? My debt will increase because if I'm doing capex with $3 lakh, so it's going to be a debt making thing for me. So my debts get increased here. I believe that the change in financial debt would be for all the years will be 3 lakhs. This is again my assumption. So guys, I believe that in today's session we have covered completely this page, right? The actual numbers. This is a pure class of forecasting, right? The basics of forecasting. Like what you have to do, you have to write the title, you have to write the terms which are clear, you have to write the abbreviations, and then the major and the important one, these are assumptions. Now, assumptions are of three types. One is the assumed, manually punched numbers. Then the other one is the linked assumptions, which are linked with the past year. I could add numbers on this behalf, but these are going to be the linked assumptions. Then black is linked, and I have made some calculations as well, just like the receivable, payable, and actual days. And we have linked to cells in other sheets. That's the green assumptions, right? So guys, for today, what you have to do, I believe that for today, you have to see this complete sheet. I'll be attaching this complete file to the LMS as well as share in the WhatsApp group. And also, you have to do this particular thing and try to make on your particular model on the assumptions tab and on the terms tab so that you have exactly an idea. In particularly the next class for this model, I'll be covering up this executive summary and the financial statement page so that we make all the financial statements and the ratios and all that, and we have enough and good idea of this. And once we have done this, we'll move on to the other models. So coming 10 classes or 5 classes are of the different models that I used to use in my life. And then I'll be sharing the formats with you as well so that you can make on this ground and you have an exactly this particular things work on, right? My WhatsApp number is with you. So if you want to enroll in this course, my WhatsApp number is this, and the course aim is simple. The course aim is quite a simple and clear that I used to give you the financial literacy with a good grip on Microsoft Office, right? So that you have exact idea that how to work on Excel and your CV will be updated. You can easily manage the workload since you have an idea that how to make the models. If your manager comes and asks you that do this particular projection, so you have an idea that how exactly these works on. And apart from that, you can do the financial modeling as a freelancer as well. You can go on the Fiverr and Upwork and ask for the projects that someone wants you to make the models like this. And so in next classes, I'll be doing executive summary and financial statement of this model, and we'll show you the other model that we're gonna be working on. So keep in touch and see you all in the next class. Thank you.